Why invest when everything looks catastrophic?
Yeah. Well, you're going to get the highest returns at that time, but they make us afraid to invest at that time by fear mongering, to be very honest, when from those returns you can get 500, 600,000% return.
Do you really believe it's fear mongering? Tell me more. Explain. Because I think people initially have a fear of doing anything with their money, whether they're doing well or not, right?
Yes.
But when you hear, oof, the market is crashing right now, why? Explain for those who are trying to understand, especially living check to check.
Because they would rather have you be a consumer.
No, it don't have anything to do with what they want you to do. They don't care about the poor. Institutions, hedge funds, they don't care about what retail investors invest in because they know retail investors invest off of emotions. They look at the little candlesticks and, oh yeah, I'm gonna buy the dip and blah, blah, blah. Like, they don't care. Like, you ever heard of all-out theory? All-out theory is that the retail investor is always wrong. And that's what all companies go by. But when it comes to investing when markets are crashing or when you're hearing so much stuff on the news, it has nothing to do with the kind of stocks you pick. It's really about the plan that you have in place, right? So if you're a conservative, you're not going to lose as much on the downturn. I mean, you're not going to make as much, but your money's going to be preserved at a good rate of return. That's why in finance, before we invest any kind of money, we make sure you have an emergency savings fund, right? 3 to 6 months of money put away so we can stay the course of the plan. So when markets are, going to shit, you're good. You don't have to dip into that money because you have that cash reserve right there, that's in a high yield saving. And also, right, you have a risk tolerance. So if you're somebody that can absorb a lot of risk, then yeah, you'd be an aggressive investor. So yeah, you may lose 40%, but if you stay the course, you're going to be good. You never lock in a loss. Time horizon, right? If your time horizon is 30 years, it doesn't matter what the market does. But obviously if your time horizon is 10 years or 5 years, like, we do goals-based investing. We don't just invest just to post on social media. All investments are tied to a goal, a number, right? That makes sense, right? Because if you're just investing just to invest, then yeah, you're already losing. So before you invest in anything, you make sure you have a risk tolerance. You make sure you have a time horizon. You make sure you have a goal and a number tied to that goal and an investment plan. And it will not matter whether the stock market is up 100% or down 100%, because about time your goal is ready to hit, you'll be good.